thank you for being here. And by the way, I don't say that loosely. Like, let's be honest, there's a lot of distractions. You've got lives to lead, you're busy. There's entertainment coming at us from all directions, and to take an hour out of your evening to get educated, to learn, to do your civic duty and be informed and hold your elected officials accountable is commendable. And Larry and I and everyone at the Fair Tax really appreciate you being here and taking time to be here. So with that, let's get moving here. So, you know, one of the things that we like to say about the Fair Tax is that it is simple. And, you know, this country is so great for so many reasons. We've evolved in so many ways. We've been global leaders in so many ways with human rights and fairness and democracy and capitalism, and just we've led the world in so many ways, and yet over the last decade we've fallen behind economically. And one of the biggest reasons for that is because of a tax code that, as you can see, is extremely convoluted. It's approaching 75,000 pages, if not eclipsed that. But the bottom line is it penalizes growth. It impedes growth. And so that's what we want to share tonight, is not only what is the fair tax, but, you know, why do we really need to make this change? You know, everyone talks about tax reform, but why? Well, you're going to see that illuminated, at least to a degree, tonight. And so, for starters, obviously, we've got to get things a little bit simpler. I mean, a study was done of, I forget how many, hundreds of different people who prepare tax returns. They were all given the same tax return, and not one of them returned it identical to the other. And that's because we've got a tax code that is so convoluted that we just can't understand it. So we've got to simplify that. Certainly the fair tax is going to do that. So our current tax code is convoluted. We've shown you that. It punishes growth and expansion. It inspires the wrong behaviors. So in other words, when you make more money, the government takes more of it. So why in the world would people want to be fully inspired to make more? They're very measured when it comes to growth and expansion. Businesses are. Lack of transparency. There's a lot of loopholes. I think we would all agree on that, and more on that in a bit. Horribly inefficient. We'll talk about this. It impedes privacy, and there's winners and losers, and of course it's extremely time intensive and laborious. So we're going to go through all of these and literally knock these out one by one, showing how the fair tax brings a solution to each and every one of these challenges that the our current tax code has baked into it. So the fair tax, if you're brand new to this, is legislation. These are the bills in the House and the Senate. It exists right now, and we've got more supporters now than ever before. Larry, I always get this number. I'm off by one or two, but I believe the number is 82 supporters. You can correct me now or later if I'm wrong on that, but if not 82, then we're close to that. That's the most co-sponsors we've had of this bill ever. And there's some pressure that's happening. There's some people that are really starting on both sides of the court, Democrats and Republicans, that are seeing the value in this. So it's pretty exciting right now. So let's talk about the fair tax bill. So first of all, it's not 75,000 pages. It's 131 pages double-spaced. You can go to fftea.org. That is the home page of American for Fair Taxation, AFFT. And you could actually download this bill and read it and understand it. So that is refreshing. So it's very simple to understand. And I think a tax system should be simple. So our current system, as we talked about, punishes growth, right? So when you make more and you grow, then the government takes more. And so we incentivize the wrong behavior and we waste a whole lot of time thinking about tax implication than we do actually making our products and services better. So the fair tax would eliminate income taxes. We'll talk a little bit more about this in a second, but it eliminates all income taxes, and it replaces it with a sales tax. And in effect, as a result, it supports growth instead of punishes it. So as you can see, fair tax is a consumption tax or a sales tax, not an income tax. You only pay on what you spend, not on what you earn. And it eliminates all federal taxes that are income related. So the Social Security tax goes away. The alternative minimum tax goes away. Capital gains tax goes away. Estate tax goes away. The death tax goes away. All those taxes go away, and it repeals the 16th Amendment, and it replaces it with one simple national retail sales tax. So, and we'll talk about exactly what that looks like in just a bit here. So you've got this opportunity. We've got an amazing opportunity here to replace a very convoluted punishing tax code with something that's extremely simple. And by the way, we call it revenue neutral, which means the fair tax would collect the same amount of money. It would raise the same amount of money today in its first year of implementation as the IRS currently collects right now. So it's revenue neutral. So what are the benefits? Well, the first thing is that right now it is estimated conservatively that $13 trillion in wealth from American citizens, individuals, and corporations is sitting in offshore banking centers. Why? To avoid income taxes and capital gains taxes. So 13 trillion, would we all agree that's a lot of money? And there is a survey done of wealthy individuals who had offshore bank accounts, and they were asked, what would you do if capital gains and income taxes were lifted and no longer existed? And the predominant answer from that survey was they would bring that money back into the states, into their bank accounts, and they would invest in what they know best, which are their businesses, the very things that made them that money. So, pretty simple concept. And it's estimated that $1 trillion of that 13 comes back in the first year. The second big bullet point is that U.S. becomes a corporate headquarter haven. So think about this. The corporate income tax rate would be the lowest in the world, 0. So companies all over the world would now start considering relocating their their international corporate headquarters to the United States. So you've got this massive influx of businesses that start relocating international headquarters to the States. And what happens? Infrastructure is needed. Buildings get built. Jobs get created because of all of the new infrastructure needing to get built. And then, of course, they need to hire staff, and people get hired. And, wow, like all of a sudden there's this massive influx of need for jobs. And the unemployment rate will plummet. And, of course, when people get jobs, they make money, their disposable income increases, and they start spending it, and you start to move what I call this economic flywheel that just gets faster and faster and faster, and the momentum is incredible that builds, right? So the economy is going to see the biggest economic boost that it has ever seen, perhaps in its history. And then lastly, the underground economy, which is estimated at $2 trillion, pays their fair share. So what do we mean? Well, anybody that avoids taxes right now, right? So, criminals or illegal aliens or undocumented workers, all these people, anytime they go to the grocery store or the mall or they buy a new car or a house, whatever it is, every time they pay, because we've got a sales tax now, they pay their fair share. So, imagine what new influx of cash flow that has for the federal government. All right. So one of the other problems with our current tax code is the lack of transparency. Now, what do we mean by this? Well, see, what happens in Congress right now with this convoluted 75,000-page income tax code is it's very convenient for Congress. Convenient because when they create something, a bill, a thing to get passed, legislation that requires money to be invested, they've got to pay for it, right? So the way that they typically do that is they will tweak some language in the 75,000-page tax code, and money moves around, our money moves around, but we never know about it. And that's very convenient for our elected officials, isn't it? And so with the fair tax, there's just one tax. Like, it's 23%. And that is the rate. That is the retail sales tax rate. And that's on all new, not used, but all new retail goods and services. And it's very important, by the way, that used goods are not taxed. So more on that in a bit. But when you go to the store and you buy a pair of jeans for $100, the fair tax is inclusive. It's baked into that $100 price tag. So on the receipt that you get, $23 of that is shown as sales tax, national sales tax. So imagine if we start getting receipts that should suggest a higher number. We would know about it. There's complete transparency. It's not like the federal government can just start changing that number and playing with it without us knowing. Forget it. That number goes up. Guess what? Every citizen that cares in this country is going to burn up the phone lines and call their elected officials and say, dial it back or you're out of a job, right? So the transparency is key, and for this reason, for the example I just gave you, that is why the transparency or the lack of transparency in our current tax code is very convenient, and quite frankly why some very unscrupulous elected officials in Congress want to keep it that way. All right, so our current tax code, extremely inefficient. Right now, for every dollar that the IRS collects, it costs them 25 cents. So that is extremely inefficient. And let's face it, the IRS, by the way, costs $10 billion with a B billion dollars to run every year, right? So inefficient. The fair tax would be the flip of that. It would be very efficient. And the reason why is because the infrastructure is set up. The states will collect from businesses, as you can see in the first bullet point. And 45 states currently collect a sales tax. So the infrastructure is already set up. Second bullet point tells us that we get 80% more efficient. We go from collecting from 120 million households down to about 18 to 20 million. So we get 80% more efficient that way. That's brilliant. And the businesses, there's just one form to fill out, which is, what are your gross receipts? What are your gross sales on your retail goods? Multiply that times 23%, and that's how much you owe us. Simple, right? And so the federal government, Department of the Treasury, collects this, or actually a state sales tax bureau is what it'll be called, collects it, and they remit the money to the Department of the Treasury, who then incentivizes their state sales tax bureaus by giving them 0.25% of all the money that they collect to ensure that they can police it, make sure that they're collecting what they need to, have it staffed, and get it done. So it's pretty simple the way that that's going to happen. There'll be some transition things that we need to probably iron out, but the infrastructure's there, and we don't have to set up any new systems. The technology is in place, because if you think about it, if you think about the cash register of every real retail outlet in the country, like, it's already set up to calculate tax. It's just a matter of changing that number. All right. So we talked about this. The IRS costs $13 billion. I think I said 10 before, but 10 to 13 billion to operate. They only collect about 75%. And the fair tax would eliminate the IRS. That is one of the things that would do. And within the first 3 years, it would defund the IRS, and it would just go away. So the other thing that we talked about is that the current income tax code really impedes privacy, and it's very time intensive. Well, with the fair tax, our privacy is protected, and it's extremely efficient. So there's no more of this convoluted tax forms and getting all your receipts together and all the time spent in the decisions around tax implications. No, forget about it. You simply pay your taxes on autopilot when you go and purchase something, retail, right? So no filling out detailed income tax forms. Very, very simple. And then, of course, our privacy is protected because, you know, the IRS isn't digging into things because the IRS goes away, right? Winners and losers within our current tax code right now. There's so many loopholes that typically the wealthy and certainly wealthy businesses employ people to figure out how to skirt the tax system. Well, there's no need to skirt anything under the fair tax. You go about your business, you live your lifestyle, and whatever it is you buy, the more you buy, the more you get taxed. It's that simple. So that's very fair. And one of the things that's really important that's been written into the fair tax legislation is the prebate. So the prebate assures that no one pays federal taxes up to the poverty level. So what do we mean by that? Well, the prebate is actually a new stream of income that will come into every qualifying household. That is a household with valid Social Security number. And what it does is it reimburses every American, not just lower income, but every American, on the fair tax they spend or that gets collected on them up to the poverty level limits of spending. So the Department of Health and Human Services created a poverty guideline matrix. And so based on the size of your household, they suggest here's what the poverty level limit of spending is. So on the right-hand side, on a 2-adult household, let's say you've got 2 adults and 2 kids, family size is 4, they suggest that if you spend $31,020 a year, you're spending at poverty level limits, right? So if you're spending that and you multiply that times 23%, then a family of 4, married family of 4, would have been collected $7,135 in fair tax. Divide that by 12, and every month the federal government is going to send you in advance $595, reimbursing you in advance for the fair tax that you'll end up spending on the basic necessities of life or poverty level limit spending, right? So really important because a lot of political figures who demagogue the fair tax conveniently will simply say that the fair tax people who support the fair tax want to raise your taxes by 23%. Of course, they don't tell you that income taxes go away and capital gains taxes go away and FICA taxes go away and there's no more paycheck withholdings, that you get your entire paycheck. They don't tell you that. But at any rate, the fair tax is brilliant for everyone, but especially lower income class Americans, because think about it. Since there's no more payroll taxes, there's no more tax withholding. So somebody who makes $4,000 a month and perhaps gets $900 to $1,000 of that every month withheld from their paycheck in real dollars. There's no gross pay and net pay anymore. So the average American is going to increase their income, their take-home pay, by 29%. They can choose to purchase used goods, such as a used vehicle, used clothing, a house that's been lived in before, and not pay the fair tax. And the prebate comes to them every single month, brand new revenue stream for every qualifying household. So really, really a brilliant point of the legislation that creates fairness inside of it. All right. So what about prices? So let's talk about this. So right now, businesses pass off their income taxes, their business income taxes, and their costs to comply to the federal tax code to the consumer. It's just reflected inside of the prices of everything that we buy right now. So let's go back to that pair of jeans example. Remember, I said, let's say under the fair tax, you buy a pair of jeans for $100, right? Well, right now, let's just say that the company who makes the jeans wants to make a 20% profit margin. And so what they do is they add up all their costs for their business, and included in those costs are their projected income taxes, as well as all their costs to comply to the federal tax code. That goes in as a line item expense, and then they subtract all of that from their revenue, and they get their profit. And then they break that down by the number of units or the number of pairs of jeans they'll sell, and they figure out that on a per unit basis they need to price their jeans at $100 in order to make a 20% margin on them. And so inside of that $80 of cost are their business income taxes and their cost to comply. So we pay for it, right? So right now we're paying an income tax and a sales tax. Might as well get rid of the income and just pay the sales. And so what we call that is the embedded tax, and it's approximately 22% in all retail goods. So under the fair tax, the embedded tax goes away, and the fair tax of 23% gets inserted. So why does the embedded 22% go away? Because corporate income taxes go away, personal income taxes go away, cost to comply to the tax code goes away, and that line item expense that I just shared in that example, it's gone, because all of those costs and expenses and taxes go away. So the 22% goes out, the 23% goes in, and marginally the prices are going to increase by somewhere between 5 and 10% in the first year. Not 23%, people. 5 to 10% increase in prices. But you take home, the average American takes home an additional 29% in take-home pay. Disposable income is going to be greater than it's ever been. And because of what it's going to do to the economy, it's going to inspire growth. There's going to be more competition, and more competition will bring that 5 to 10% price increase back down to pre-fair tax levels, and we will have no income taxes and the exact same pricing that we were used to. Pretty brilliant. So if you think about it, we've eliminated all of the negatives of our current income tax code by implementing the fair tax. So if that is true, and it is, why would anybody not want to implement it? Well, the only people who wouldn't have their income and their livelihood and the way that they maneuver is all based around our current tax code. So lobbyists, get this, 50% of lobbyists are tax lobbyists. Tax lobbyists are hired by wealthy corporations to influence corporate income tax code and get tax breaks for the corporations they represent. They get paid 6 or 7 figures to do that. Well, if corporate income taxes go away, guess what? There's no need for tax lobbyists anymore. So their job goes away. So they feel threatened, and so they act out of self-interest, and they tell their politicians who they're lobbying that they are not going to financially support their reelection campaigns anymore if they support support the fair tax. Imagine that. And of course, we already talked about politicians love our current tax code right now because it's a big cloud and they can operate inside of it without any of us seeing what's actually going on. The fair tax would create a transparency that they're not so keen about. The IRS goes away, so we know that. They probably are going to be out of a job, or they will be, and they're not keen on that. But it's time for us to evolve and get rid of the IRS. So that's it. And so we're going to get to our special topic in a second, but that's an overview of the fair tax, ladies and gentlemen. And again, as you can tell, it is comprehensive. It covers all of the key points of a very effective, progressive tax system. And every citizen and every business in this country will be better off for it. So let's take a break here, and let's go to some questions. And I'm going to unmute my colleague Larry. Or Larry, I'll ask you to unmute yourself.
I'm with you.
And we're going to hit on some questions here. All right, you ready to go, Larry?
Yes, sir. Let's do it to it.
All right. All right, so the first question comes in from Paul, and that question is, how do charitable organizations feel about the fair tax? Larry, you want to take that on?
Well, a lot of them do not quite understand the fair tax yet. They haven't been indoctrinated into how it will work. Those who have had the opportunity to be exposed to how the fair tax will work are in favor of it. The fair tax does not affect them in a negative way. What it does do, very positively, is it relieves them of the burden of filing the tax returns that they have to file today. The only return they would have to file is if they're selling retail. For example, if they sell a Bible or they sell a meal, then that would be a retail transaction that they're doing, and they would be taxed on that. Otherwise, they have relieved themselves of paying their portion of an employee's FICA, their Social Security and Medicare taxes. They no longer have that, so that's extra money in their pocket. And if they're buying used materials, then they don't have to deal with that process, because then they don't have to pay the tax at all. And I see somehow I got my camcorder running here. I got to see if I can shut that down, because I don't think anybody wants to see what I look like. Well, it says I'm off. Okay, let's try.
We can't see you, Larry.
Okay, I'm off. So effectively, it depends on whether or not they've been exposed to the fair tax. And like a lot of other people, once they understand it, they'll demand it. Mark?
Yeah, thank you. And one other point, Larry. People who contribute, people who donate to causes that they care about, they don't do it to get a tax break. That's kind of a nice little cherry on top benefit. But that's not why they do it. They do it because they're inspired by the cause. And so if that's true, and it is, then if they have more disposable income in their pocket, guess what? They have the opportunity to donate more. So it is estimated that charitable givings will rise under the fair tax for that reason, because of the increase in disposable income. All right. Kim asked the question, are there any ideas regarding the jobs lost by accountants who specialize in income tax returns? It's a great question, Kim, and absolutely there's an idea. And the idea is that when W-2s and 1099s and all that, when that goes away, that is the mechanism right now whereby financial institutions predominantly use to verify income to see if somebody can qualify for credit being lent to them. And so there's still going to need to be income audits done in order for people to qualify for credit. It's going to be a huge, huge need for mortgage companies and credit card companies and other financial institutions. And so one of the ways that accountants who do income tax returns can evolve and maneuver without having to simply just lose their job and get out of the business is by becoming an income auditor on behalf of these financial institutions who their services are going to be in demand because they still need to verify income. So that's one of the biggest opportunities that they'll have. Anything else you can think of, Larry?
Yeah, another opportunity is now that there are no longer federal income tax returns, if somebody wants to make a loan to add to a business, build a business, buy a home, a car, what do they do now? What do they take to a potential lender to show that they are credit worthy? What they will need to do now under the Fair Tax is go to a certified public accountant with their financial records, their banking records, etc., and show them what they have to prove their financial stability. That CPA will then create a certified financial report for that potential lender that he will take to the lending organizations and show them what he has in the way of finances and that he is qualified or not qualified for the particular loan or mortgage he wants. That's a new business for accountants. In addition to what Mark mentioned, and in addition to the fact that accountants will still be required just to keep records for the cash flow of any business that has to know what's coming in and what's going out. Mark?
Yeah, perfect. Thank you. Question from Mary Jo. She writes in, how will the current state sales tax factor in? Not at all is the answer, is the simple answer, Mary Jo. So the fair tax is national federal government tax legislation. It does not stipulate state income or municipal income taxes or sales tax platforms. So it doesn't impact it at all. However, it will probably influence it. And so there are many states actually right now that are considering completely eliminating their state income tax and replacing it with a state sales tax or marginally increasing their state sales tax. In fact, some are actually municipalities and counties are considering a sales tax in place of property taxes, which would be really interesting. So at any rate, that's the answer. No impact on state sales tax, although it will probably influence it, meaning that states will probably go in the direction the federal government remove their income taxes and replace it with a sales tax. Paul asks, is Max Baucus on board? I don't know who that is.
Max Baucus is a senator, and along with, he's the head of the Senate Finance Committee, and
Okay.
along with David Camp, the chairman of the House Ways and Means Committee, went on a tour, supposedly a search tour, to find out what would be the best form of tax system to change to. And what they're trying to do is find justification for their flat tax, which is a flat tax on income. It preserves the IRS and the Social Security deductions, payroll deductions, and all of that garbage that we're trying to get rid of. So it maintains the mask and this labyrinth of complexity that we have today. Mark?
Yeah, thank you, Larry. So Alan asked the question, do businesses pay tax on what they buy or on their gross receipts? Actually, I'm glad you asked that because I forgot to mention this, so thank you, Alan. Businesses do not pay tax on business-to-business transactions. So normally I use and I forgot to say this, I use a home builder as an analogy, or as a good example of this. So when a home builder purchases from other businesses all of the materials they need to build their home, that they actually the materials they purchase it's a business-to-business transaction, and business-to-business transactions are exempt from the fair tax. So when they buy all those inputs, no fair tax is levied. When they sell when they build their home and they sell it, it's considered a new good, and so the fair tax must be collected inside of that sale. And so on that gross receipt, then yes, the fair tax is collected, but not on what they purchase in order to create their product. So thank you, Alan. This question is also from Alan Larry, who asks, does FUTA remain? FUTA.
Federal unemployment tax. I don't know. I believe that goes away, but I'm also thinking that that may not actually be part of the income tax code as we know it. I don't have a good answer for you on that one. We have to look it up and get back to you.
Yep, we'll look it up. All right, rolling right along here. Great questions, everybody. Okay, so we'll do a handful more, and then our special topic, and then we'll go back to the questions. All right, so explain the difference. This is great. Explain the difference between the flat tax and the fair tax. So I'm going to give you just one broad stroke to keep it clean for everyone, and then Larry, you can dive into any other details. But the flat tax is still an income tax, and it just taxes everyone, all Americans, regardless of income, at the exact same rate. Perhaps that rate is 15%, let's call it, across the board. The fair tax eliminates income taxes altogether and collects revenue for the federal government in a new way, which is through a national sales tax. So income taxes go away, and you pay your taxes at the cash register when you buy new goods and services. The flat tax is still an income tax. Everybody gets it at the exact same rate. So there's a huge difference there. And what we want to get away from is an income tax, period, because an income tax by default inherently penalizes growth. Larry?
Yeah, I think the biggest thing in my mind is the one on the corruptive side, and that is a flat income tax will never remain flat. It will only be months before Congress is implementing some additional form of income taxation, whether it be another capital gains tax or something else of the nature. And we want to get rid of that ability and keep Congress from being able to implement minute tax increases by putting tax legislation in that only affects small bodies of people. That's divide and conquer tactics that Congress has been using, and we want to stop that. Mark?
Yep, thank you. All right, two more, and then we'll go to our very quick special topic and then right back to the questions. All right, especially in the first year, where do the funds for the prebate come from? They come from the 23% collected by the federal government. So when the number 20, we've done a special topic on this. I'm not going to go into it deeply. There's a lot of economics that went into figuring out why 23% is the right number, but there were, I forget the number, Larry, but something like 50 brilliant PhD economists. The largest independent research study in the history of tax reform was funded by advocates of the fair tax who put up $22 million for this research, and these PhD economists did all the math and looked at how taxing retail goods and exempting business transactions, and they looked at all the factors, and they settled on 23%. And so that's the number, and that includes the prebate that they pay out.
Mark, I think you missed the point of his question.
Okay.
If you think about it, in the first year of implementation of the fair tax, we as a nation and the government will be living on the revenues they're collecting from last year, right? Because we'll file For example, we're getting ready to file income taxes now for 2013.
Mm-hmm.
And the money that's been collected over 2013, some of that is what we're going to be living on in 2014 until new revenues come in. So that 23% in the beginning will be coming from the revenue from the previous year. And if you think about it, because the fair tax is actually revenue neutral, in other words, it provides the same amount of money as they were collecting under the income tax system, there won't be any dip or any deficiencies in having the funds to pay the 23%. That was calculated, or to pay the prebate. That 23% was calculated into that formula, as you had mentioned. I hope I didn't muddy those waters. Mark?
No, I appreciate that. Thank you, Larry. All right. When buying a new home, will the buyer pay the sales tax over time? I'm not sure I understand that, Larry.
Okay, well, you've got two situations here. You've got one, is he buying a brand new home, in which case then the sales tax would be implemented into the price of the house he pays, and it will be part of his mortgage, less whatever down payment he makes. Yep. If he is buying a totally used home, then there is no fair tax on that. So whatever his mortgage is going to be based on the sales price of the house that he agrees to. That's all.
Yeah, perfect. So the answer to that then is, if you're buying a brand new construction home, essentially the answer is yes, you're paying it over time, but it's what we need to understand is that the fair tax is inclusive. So let's just say your mortgage payment for whatever it is that you're financing is $1,000 a month. What's already factored into that is the fair tax was factored in to the price of the home that you purchased. And so it's baked into that mortgage payment. And so the reason why it does get paid over time is simply because you make mortgage payments. It's not a separate tax on top of the mortgage payment. And once again, I hope I didn't muddy the waters, but try to make it clear. All right, we got some great questions coming in. We're going to get to all of them. What we want to share really quickly is, in our special topic, is a transition. And so we actually talked a little bit about it from a question: how does the prebate get paid out in the first year? And part of it will come from funds collected in the year prior. But this is really simple, and this is one of the things that we love about the fair tax. That's very, very simple. So there's really only one major stipulation that people need to know about in terms of the transition, and that is for retailers who sell products. So this is called the transition inventory credit. So just look through the bullets. All goods, all products held in inventory or various stages of production on the implementation date of the fair tax will not be taxed again to avoid double taxation. There's a 2-year exemption for that. So what that means is, let's say you make widgets and you've got whatever, a couple 100,000 widgets sitting on your shelves that you made this year, but next year we go to the fair tax. Well, when the fair tax gets implemented, and those widgets that you already made in the previous year sell, you do not have to remit the 23% to the federal government for those products, widgets in this case, that were manufactured while under the old income tax system. And that's it. So other than that, the fair tax, when I say fair tax pricing goes into effect, what that means is that for retailers, businesses, remember we had a slide about this, the cost of them to comply to the federal tax code and their corporate income taxes go away, and they input the fair tax into the price of their good. And as we said, we predict that prices will perhaps increase by 5 to 10% in that first year. And then competition will dial that back to pre-fair tax levels. And then ultimately, April 15th becomes just another spring day. That's it. So for the average American, in terms of a transition, literally the only thing that they're going to recognize as different is that they get to take home, their gross pay becomes their net pay. That is literally the difference that the vast majority of Americans are going to recognize in this transition. And then all the stress about doing their taxes gets lifted. But the big thing for businesses to know is that for those that have a product-based business, basically they've got 2 years to sell the products that they've already manufactured or are in the manufacturing process, and that's exempt from fair tax, having to collect fair tax on it and admit it and remit that to the state sales tax bureau over a 2-year period. That's it. All right, so let's get back to your questions. There's a lot of them, Larry.
Yeah, one thing else I want to add to before we go into the questions regarding the transition. Sometimes, or frequently, the 23% is frightening to people, saying 23% I'm going to be paying. What you have to remember is that, or what you need to know, is that under the fair tax, because of the prebate, the effective tax rate for the average American is going to be approximately 11%. In other words, 11% of your gross income is going to be taxed based on your purchases. And the less you purchase new, the more you purchase pre-owned, the lower that rate, that effective tax rate will actually be. Mark?
Yeah, thank you, Larry. So Owen writes in, and Larry, I'd love for you to tackle this because I always love the way that you tackle it. Owen writes in, I have approximately $3 million in savings. Well, Owen, you don't know this, but I'm a family member. Just kidding. Good for you. Excellent that you've saved that. And Owen writes, I don't want to be taxed again. What gives here, Larry?
Well, the first you have to remember is that you're already paying the sales tax on anything you purchase. Whether it's new or used, there are embedded costs in that item that you are paying when you spend any of that $3 million. That will go away, and the fair tax will go in its place. So essentially, you're not seeing it. Somebody's got a microphone open to a speaker because I'm hearing an echo.
No, I don't hear it.
You don't hear it? Okay. So ultimately, you're not really seeing an increase in your taxation, Owen. The other thing is that if any of that $3 million in savings is in pre-tax investments, 401ks, retirement IRAs, etc., that the tax is deferred on, when you take distributions on those monies, they will not be taxed under the fair tax as they are being taxed or will be taxed under the income tax. I hope that answers the question for you. It relieves you a little bit anyway. Mark?
Yeah, Owen also asks, he's got a bunch of money invested with after-tax income. Do I get taxed again when I seal, in other words, when I cash in on those investments? I believe that's what you mean. And the answer is no. And so that's actually a big positive for a lot of people who invest. And many people invest in tax-deferred securities or financial instruments, and they get an even bigger windfall because, again, they're expecting it to get taxed when they bring it out of that investment instrument, and that, of course, won't happen under the fair tax. But the answer is no. You got a bunch of money invested. When you bring it out of those investments, no taxation on it under the fair tax. All right. Let's see. Who will be responsible, Larry, to send out the monthly prebate, and how are they going to know incomes?
Well, that is going to be accomplished by somebody who is already doing a very similar function, and that's the Social Security Administration. The requirement is that we Americans will have to file a report or a form to the state's collection agency, who will pass it on to Social Security, declaring those in my family or your family that have Social Security numbers and a legal residence in the United States. With those two items in place, you qualify for the prebate. From that point on, once a year, you will refile that form. The only thing that would change that is if during the year you have a change in your family status. Somebody gets married, moves out, or somebody gets out of school but doesn't have a job and moves back in. Anything of that nature where they could qualify to be a dependent of yours, then you would have to file for a change of the number of people in your family so that you get the additional prebate. If the person moving back in is an adult, they will qualify for their own prebate based on their legal residence and their Social Security number, and you don't have to deal with that. Mark?
Thank you, Larry. So I want to address this, Larry. Remember the question from Owen about he's got $3 million savings and
Yes.
he's already paid taxes on. So Owen writes back in, sorry, but you're asking me to pay again. I will need to see an exemption for savings prior to supporting anything like this. And I want to just ask Owen if he thinks that, and I'd like you to write in, Owen, if you think the current tax code, with all of its loopholes and complexities and lack of transparencies and inefficiencies, is better than what we just presented. Because what you're suggesting is that that very what I would consider, let's just call it pain. The pain of quote unquote paying again is minuscule compared to continuing to be burdened by the current income tax system. And the bottom line is you're going to be better off financially, and I'd be happy to go toe-to-toe with you on that. So I'd love for you to consider that for a second, the big picture, and share your thoughts on that. Larry, anything else you want to say?
I think the best bet for you, Owen, is if you've got that kind of revenue available to yourself, that kind of financing, you've probably got some time on your hands. Pick up H.R. 25, the legislation, and read it for yourself. Because all we are doing is trying to educate people on what the legislation says. And if you don't believe with what we're saying, that's fine. You're certainly entitled to feel that way. But read it yourself and then let us know what you think. Mark?
Thank you, Larry. Yep, just an education process here. All right, business that basically sell their labor, such as construction, what is taxed there? I'm not connecting the dots between construction and selling labor. Not sure that I get that.
I don't have an answer for that one yet either. I'm not sure where he's coming from.
Yeah, so John, go ahead and write back in and maybe clarify that question for us. All I can think of is that if you're suggesting
nothing is taxed. I just reread that. Excuse me. I'm sorry for jumping on you like that.
Go ahead.
Who is that? John. Nothing is taxed there, John. The labor that is being sold to the general contractor is just like any other employee. All employees are people selling their labor, their service, to some company. There's no tax. There's no tax on income, period, no matter where it comes from. Rob a bank, it's not taxed. When you spend it, it is. So in the case that you've asked for here, when that laborer gets paid, there is no tax withheld from his income. When he goes to spend it, he pays the tax. When the general contractor sells that new home, he will collect the tax to the new purchaser because that is the final sale at retail to the end consumer. Mark?
Yeah, and then a question came in, how about medical practices that sell labor? And so I just want to distinguish the difference between a service versus labor. Labor is a cost to a business versus, so a doctor who sells medical services, a service is considered a new good or new, if you will, every time it's administered, and so the fair tax is levied and the consumer pays that every time, but it's embedded inside the cost of whatever that service is. So I just want to make that distinction between labor as an expense versus selling a service, which is considered new every time it's administered, and therefore the fair tax would be built into the price of whatever is charged for that service. Will this webinar be repeated? Yep, 4th Thursday of every single month. And it's being recorded, and it will be posted on fftea.webinars.com. fftea.webinars.com. By the way, Chad writes in for Owen. For Owen, he will no longer have capital gains taxes, and he'll have 100% of that to reinvest. Great point. Thank you, Chad. All right, bunch of more. Here we go. Stay with us. Will the fair tax be presented as an amendment to an Article 5 convention? I have no idea what that means, Larry.
That's not allowed. Under the Article 5 convention laws, as I understand them, and if I'm wrong, just slap me, when the states agree on a potential amendment, and that calls for, they have enough states, the 43 states to have the convention, they can only bring one issue to the table. In order for the fair tax or any other constitutional amendment to be brought to a constitutional convention, again, the 34 states or 43 states, I might have the numbers incorrect, have to agree on that particular issue also. So the answer to your question is no, it cannot be brought up as an amendment, but there are people looking at the possibility of trying to do an Article 5 convention for the fair tax. That is not something that fairtax.org or Florida Fair Tax is attempting at this moment officially. Thank you. Mark?
Mm-hmm. What about inheritance tax?
Gone.
That goes away. Gone. Beth writes in, great question, Beth. What about Social Security? If there is no difference between net gross income, do individuals no longer contribute to Social Security? Yes, they do, but it's not withheld anywhere, Beth. Social Security and Medicare get paid from the fair tax collected from all citizens. So every time we go and spend and we pay our fair share of taxes when we spend, in effect, we're contributing to Social Security and Medicare. In fact, as we all know, Social Security and Medicare programs are very much in trouble right now in terms of whether or not there's going to be money available for those programs in years down the road. With the fair tax, because of the estimate boost to the economy, the federal government will get more revenue, and as a result, the fair tax just might save those programs. So, at any rate, the answer to the question is, yes, individuals contribute, but not in the traditional way of having income withheld. There's simply a fraction of what it is that they pay every time they purchase something at the retail level. When it's collected from the federal government, gets put towards Medicare and Social Security. All right. And yes, Kim, you are right to assume that Social Security will be covered from the 23% pot, not from a separate revenue stream. That is correct. All right. Will there be a 23% tax on gasoline, oil, and food, Larry?
As far as I know, the answer is yes. But once again, remember the embedded taxes that are in those items now are going away. So we'll see essentially the same increase in retail price that you had spoken of earlier, 5 to 10, maybe 15%. But we're all taking home a lot more money because there's no withholding.
Yeah, and a point worth making again is people tend to forget this whole pricing thing, that the embedded taxes come out. It's really important. And it's really important because without understanding that, the natural tendency is to think that all of a sudden prices are going to have to jump by 23%. Not true, not true, not true. Right? That $100 pair of jeans that you buy now might go up to 105 or 110 bucks, but you don't get to the cash register and pay 23% on top of 100. The fair tax is included in the price tag. And because the embedded costs come out, the fair tax goes in, prices remain relatively within 5 to 10% the same in the first year, and any increase that you do see in the first year will come back down in the second year because of competition. All right. When a home is sold or changes hands more than once, is there sales tax imposed a second time? No. It's considered a used good forever after the second time or after the first time it's bought. Elaine writes in, I'm a grain farmer. We sell our corn to the elevator. The elevator sells our corn to a farm that raises hogs. The hog farmer sells the pigs to a butcher. The butcher sells the meat to the consumer. 3 people are selling things. Who pays the sales tax? Well, ultimately, the consumer pays the sales tax when they buy the meat from the butcher, from the butcher, and the butcher is responsible for collecting that fair tax and handing it over to the government. Everybody else, those are all business-to-business transactions. The fair tax is not relevant in those scenarios. It's a great question, Elaine. Thank you.
As a farmer, you no longer have to file a federal income tax return, regardless of where your income is coming from.
Yep, beautiful. How does the fair tax affect interest rates on lending, and will the central banks still be involved? To my knowledge, yes, the central banks will still be involved. I can't imagine them not being. That's a whole nother webinar, though. How will it affect interest rates? Well, I don't really know the specific answer to that. I'm not an economist in that sense, but I would think with the increased disposable income from consumers and the economy that we expect to increase, the access to capital should be more plentiful. How that specifically impacts interest rates, I'm not sure that I feel comfortable speculating.
Yeah, the research that was done implies or indicates that interest rates should decrease by about 0.25% from where they are when the fair tax is implemented. And that's due to the lower cost of doing business that the financial institutions have. They happen to be at the highest rate of embedded costs, over 25%, and that goes away. So their cost of doing business is less, money is more plentiful. The wealthy, who are no longer have to be taxed on their wealth, will invest that money, and that money being invested is cash that's available. We will ostensibly be saving more because we'll have more cash at our disposal, and hopefully we'll be saving more. That's money available for lending, and so with the increase in cash availability, interest rates will come down a little bit. They estimate 0.25%. Mark?
Mm-hmm. Thanks, Larry. All right. All right, this question is from Bill. If someone wants to get a CPA to prepare a financial condition report for them to take to a bank or lender, the CPA is going to charge for this, especially if there's an audit. So how is that advantageous compared to the borrower just taking a copy of his previous year tax return to the lender, which doesn't cost him anything?
That's a joke. What do you mean it doesn't cost him anything? It costs him, he either spends anywhere from $100 to $350 to have somebody else prepare his tax return, or he spends innumerable hours doing it himself. It still costs him something. Now he doesn't have to worry about it. Plus he gets a full paycheck. He's got more money at his disposal. Going to borrow that money and getting a CPA, paying the CPA service is not a big expense in that situation, at least not to me. Maybe I'm looking at it wrong. Mark, do you see it any differently?
No, you jumped on that before I could, and sorry, Bill, we jumped on you big because what you're saying is that, yeah, you spend a couple $100 to get this financial report done versus revolutionizing the American economy and increasing your disposable income by 29% every year for the rest of your life. Like, it's the trade-off is well, you just can't compare it. But I think you get our drift, and we appreciate you writing in the question. All right, when the government buys products, will they be required to pay the 23%, Larry?
Yes and no. It depends on which branch of the government is buying what. If the government is buying products for self-consumption, yes, they will pay the tax. The trade-off on that is that the government is no longer contributing 50% of their employees' Social Security and Medicare taxes. That's a huge saving when you consider the number of employees they have and what their bankroll is. So yes, they'll be paying the 23%. If they are buying something to provide a service to the public, then no, they would not be paying the 23%. So it's kind of a funny line. It's not very clear, but there are, I've read it and I just don't remember it clearly. There are guidelines on how that would be done in the legislation, within the legislation and within the research, and we have to rely on that to do the job. There may be some tweaks required in future years to balance this out a little bit, but at least we're rid of the income tax system, which is untweakable. Well, it's tweakable, but it's unrepairable. Mark?
Yeah. Thank you, Larry. How will the number of household members be monitored, Larry?
Well, that's going to be the honor system. You will have to, as I had mentioned earlier, submit once a year at minimum a form declaring your own place of residence as being a legitimate place and your own validated Social Security number. And that's the monitoring that will be done. If they find that that is incorrect, then you won't qualify for the prebate. You'll also have to submit on that form all of the other members of your family, which would be your spouse if you're married, and any others who you are legally qualified to have as your support for. They are dependent on you. If any of those people do not have the valid Social Security number and they don't have the same address as you, they will not qualify for the prebate for you. So that's the only monitoring that's going to be done. That will be done by the Social Security Administration. Mark?
Yep. All right, thanks for staying with us, guys. We got about 10 more questions here, and we're going to rip through these, but this is great stuff, so thank you for these questions. People want to know about the video. Yeah, so we're recording this, and within a couple of weeks is usually what it takes. We get it up on the Florida FairTax website. It's fftea.webinars.com. So that's where there will be a replay of that. Let's see. Okay, the estimate of job creation seems overly optimistic, as onerous regulations and requirements such as Obamacare will still inhibit the economy and job formation. Well, that's your opinion and speculation, and it might be something that I agree with or not, but Alan, the fair tax, and quite frankly, I'm not sure a tax system at all can regulate government spending. We have to regulate that with our vote. So the fair tax does not tell Congress what it can and cannot spend money on, and I don't care what tax system you have in place, the government, when it gets its hands on its several $trillion, is going to decide and think that they're going to decide where they should be spending that money. That's another issue. That's all I got. Larry, anything?
Yeah, well, what I would add is that in spite of these regulations, which is the spending side of the coin, we're dealing with the revenue side. The fair tax, just in the fact that it makes the United States of America on a level playing field with our international partners as far as imports and exports go, the Made in America label is in high demand in the other countries. Our pricing will now be much more favorable to those people in those countries, so we do anticipate that businesses that are exporting from the United States will have a substantial amount of growth because of the fairness now in the pricing. With that growth, they're going to require new employees, so there's job growth that will take place just there. Once the economy starts rolling in a positive fashion like it will, then the other parts of the economy will start to grow also. Unfortunately, that will mean more money for the United States government than we would like to see them have, and that's another battle we will have to fight, curbing spending. And I hope as soon as we get the fair tax implemented, we can take our efforts and our thoughts about it and attack the spending part of the issue. There is a balanced budget amendment being pursued now as a Article 5 convention, and it seems to be making good headway. That's a great start to get the balanced budget amendment. But seeing how Congress seems to ignore the Constitution anyway, I'm not sure how much power that would have. The real power is in our vote and in getting these people out of office that like to spend. Mark?
Yep, good stuff. All right. How do we cast our vote for this fair tax? Thank you, Charles. So a couple things. Number one, go to PopVox, P-O-P-V-O-X. P as in Paul, O, P as in Paul, V as in Victor, O-X, popvox.com. And there is a list of government legislation that we as citizens don't technically vote for, but we vote with our opinion, and when there's a large amount of activity, certainly politicians look at that, and it influences them because it's their constituents that are on there. So popvox.com is one way to show your support for it that has influence. And then two, you can go to fairtax.org, and you can look up your congressperson, and literally there's a platform on there that allows you to email your elected official and send a note to your elected official right on that website. And so that's the second way. And then the third way is you vote for the fair tax at election time by choosing to vote and support candidates that support the fair tax. And that's perhaps the most important time to cast your vote. So thank you, Charles.
Yeah, the other thing I would like to add to that is if you haven't already done so, create a Facebook account for yourself. You don't have to give them all of the personal information that they ask for, but you can create the account and start talking about the fair tax. And as you get messages from other people regarding the fair tax, press the like button and like it, or share it even with a comment of your own in support of whatever the comment was that you received in your newsline. But the Facebook is a powerful tool to use for spreading the news about the fair tax, and I encourage you to do that. I also would like to tell you that on Tuesday coming up, the 28th, there is going to be a webinar on Facebook and the fair tax, a powerful tool. And I'd like you to join that if you can. If you want the information on where to register for that, send me an email at repeal_16@earthlink.net, and I will give you the information personally. Thank you. Mark?
Thanks, Larry. Yeah. What tools are most easily available to educate our representatives regarding the fair tax? Kim wrote that her representative McKinley wrote back and said he would vote for tax reform that the West Virginia people prefer in response to my email regarding the fair tax. So I love the first fair tax book. The first fair tax book is written by Neil Bortz and John Linder, John Linder being the original co-sponsor of the bill. He's no longer in Congress. But I like sending that book, Kim. It's a brilliant way, and then there's some great white papers that are on the fairtax.org website that can easily be downloaded and sent. Real easy to read. They've got all kinds of empirical data from highly credible sources. So those are the two things that I would recommend. Anything else, Larry?
No, that was fine, Mark.
I want to thank Owen. Remember the conversation we're having with Owen about his $3 million in savings. And Owen, I've gotten what you've written in here, and thank you. And we really appreciated you participating. And just some back and forth of what would be valuable for everybody to hear is, you know, Owen, you're right. As you say, we've got probably some tweaking to do, but there's no question what we've got. The fair tax is going to be a better system overall for everyone in this country. And you're right, it's probably not perfect right now. We're going to need to tweak it. But considering what it's going to replace, we are absolutely in a much better position by implementing the fair tax. So thanks for your time here tonight. A couple people have asked us to go over the prebate slide again. I could do that. I'm just going to go back here. Larry, can you still see my...
I can see your screen.
You can? Okay. Let me just go to the actual slide. Where am I here?
While you're doing that, I'm going to pick up a couple of other things here. Somebody asked that I repeat the email address. It's the word repeal, like repealing the 16th Amendment. Repeal and an underscore 16@earthlink.net. And you'll also be getting an email from GoToWebinar within the next 24 hours. And there will be a link on there where you can respond. If you didn't understand the repeal underscore 16 here, email that address that you get tomorrow, and you can ask the question there, and I will get it to you. Mark, I see your slide.
Thanks, Larry. Good. Perfect. So I think this is what you're looking for, Brian. So for anybody who had a question about the prebate, again, Department of Health and Human Services are the ones that came up with the annual consumption allowance that you see. And when you multiply that number, for example, in the 2-adult household, annual consumption allowance, family size 4, that number is $31,000 roughly. Multiply that times 23%. The fair tax paid over the course of a year is just over $7,000. Divided by 12, and that family gets $595 that comes into their household at the beginning of each month. I'm going to leave this slide up for you here, Brian. Okay. Is it possible an underground economy will develop based on buying or selling used items? Larry?
I'm sorry, say that again. I was reading something else, Mark.
Is it possible an underground economy will get created?
Of course it is, just like we have one now. It will be nowhere near the size, however. If you think about it, the 85% of all of the tax revenue, retail tax revenue, comes in from the huge multi-store chains, the Best Buys, the Sears, and so on and so forth, Costco's. Those companies are not going to be doing anything to screw up their licensing and their ability to do business. So what we're talking about is the small person like you and myself who might have somebody who will sell them something and not charge them the tax as a favor. They'll end up paying it anyway because they're going to have to report their income received. So they'll pay 23% on that. The bottom line is that under the income tax, it only takes one person to cheat. Under the fair tax, it takes two, you and whoever you're trying to buy from. And that's not as likely to happen as it is today. Mark?
Yep, perfect. Who's going to oversee and implement the fair tax? Well, the Department of Treasury is ultimately responsible. And I suppose they're the ones who also interface with ensuring that the state sales tax bureaus get created. So for that purpose, I would believe that they're responsible for implementation as well. Is that right, Larry?
That sounds correct. The primary enforcement and administration will be done by the states. And then the federal government will have a new department. It will not be called the IRS, although it might be similar to that, except they'll only be collecting revenue from the 50 states as opposed to the 120 million tax filers today. And their job will be to act as overviewers to be sure that the system is working right, and they are required by the legislation to meet with the state collection agencies once a year to go over the process and see if there are areas that need to be altered for improvement purposes. Mark?
Thank you. Do we have a date when the fair tax is going to be voted on in the House and Senate, Larry?
No, we don't have a date, but I'll tell you what, we've never been closer and we're at a critical moment. The House Ways and Means Committee, under David Camp, the chairman, is going to be bringing some form of new tax revenue program to the House, we believe, in this quarter, January, February, or March. And we certainly want them, the House Ways and Means Committee, to pass the fair tax onto the floor for honest and open debate. We would not mind that at all. Even if the fair tax was not elected, at least we fought the good fight and we got our product to the floor where everybody could discuss it in an open forum. I would encourage you, therefore, to contact any members you know of on the House Ways and Means Committee. In fact, contact all of them and let them know that you're a fair tax supporter and you think that they should pass it on to the Congress for discussion to at least give it an open opportunity and have an open government rather than to just hide it again. Mark?
Yep. A question from Alan who asks, are federal excise taxes and highway taxes, will those go away? No, they do not. Current Social Security payments are determined by an individual's income over their work life. How would payments be determined for the individual when they collect their benefit?
Great question. You got an answer, Mark?
No.
Okay. It's just something I had forgotten to mention earlier. Once a year, your employer, if you're self-employed yourself, will submit an affidavit to the Social Security Administration declaring the gross income earned. And that's what the Social Security will use over the years so that when it comes time to determine what your benefits will be, they've got the numbers to calculate them by. Mark? Simple, wasn't it? That was simple.
Now I got it. Thank you, Larry. Mark writes in, since the Ways and Means Committee controls the vote, what are we doing to speak with every Republican, or for that matter, every Democrat on the committee? This is going to be key to getting a vote to the floor, for sure. So, Larry, you touched on this, but anything else you know of that we're doing?
No, we are contacting them as much as we can. We're being a little bit of a nuisance. those members, I think we have 4 members on the Ways and Means Committee who are co-sponsors to the FairTax. If there is a Ways and Means Committee member in the state that you live in, I would encourage you to find out what his phone number is or his fax number and lay it on. That's the best we can do, ladies and gentlemen, and I encourage you. I can't say it strong enough. Do that. Contact those people now and contact them every week asking them, have you decided to pass it to the floor or something of that nature, but communicate. Let them know that there is a lot of interest in getting the fair tax brought to the floor. Thanks for that question.
Yeah, Larry, we did it. Wow, what a great group of questions. Boy, here we are, 9:30, and we've got just about everybody who hung on with us. So thank you so much, everybody. So the last thing we just want to say, first of all, thank you for all your questions. Like, brilliant discussion tonight. Loved it, loved it, loved it. Is if you're just hearing about this, or you're hearing about it for years, let tonight be a night that inspires you to actually do something about it. You know, when I first heard about this, I got so inspired that I said to myself, this can't be something I just let everybody else do. And I got involved. And here I am, years later, leading the national webinar. Never would have expected that in a million years, but I feel great about my contribution. And, you know, everybody can make a contribution. So go to fairtax.org, click on Grassroots. You can search for your local grassroots club. Contact somebody there. Get involved. Get involved and educate the people that you know. And contact your elected officials on a regular basis, not just once. And go to fairtax.org and donate, because we need money. We need money to keep this campaign and fight this fight. So thank you for being here. Come back next month. Bring 3 people with you. Tell your neighbors. Tell them to go to fairtax.org. Buy them the book. Get educated. And let's just keep rocking this thing forward. We're closer than we've ever been. So thank you to my colleague Larry. Once again, you've outdone yourself with your knowledge. And we wish you all a great night, a great new year, and come back and join us in February. Take care, everyone.
Good night, everybody.
The organizer has